You see a high break and think price is going to run, but then it reverses hard. It's not your strategy, it's your understanding of structure. In this video, I'll show you what a smart money structure break actually means and why most traders are reading it backwards. So many retail traders see price breaking a high and just think price is going to run away. And that is not what smart money are looking at. They're looking at that trap and they're definitely not looking at bullish price action. Let's look at the pound US dollar here on a daily time frame. It's a great example on current price. We don't need to go back. We look at current price to understand how this smart money structure is going to work. We'll look at internal structure and the swing structure and how you can avoid these traps and understand what structure is really telling you. Let's first understand the smart money structure. If you're new to the channel, I'm Jarvis, teaching you how to understand smart money structure here. There's a specific way we look at marking up the structures. Let's first just go through and quickly cover how we mark that structure. If you've been learning structure here, the next step is the Profit Per Trade workshop. It's just £99 right now and includes module 1 from my full 90-day system, links below. So when we're looking at our structure, typically what we're looking for is price to basically break a level. So we'd have price creating a swing structure and we're looking for that breakout to the upside. Very, very simple. Now the way we mark our structure is using the candlesticks on the chart. And I'll go through that now on this chart to show you briefly how we mark this up. So on this pound chart, let's just quickly look from price back here. Understanding our structure as we use the candlesticks. I'm going to display this with arrows on the chart to make it much more simpler for you. We're going to start from this high here in the market. Okay, we're going to start from this high. What we're looking for is once we see price breaking a low, and it's going to be this low here, and I'll go through why. As we see price breaking this low and we create a close through, it's important you understand our structure is using a close through. It's going to this area much closer. So once we identify this bearish candle's closed through, right there, that candle closed through, we look back from that break and we're looking for the last candle we see that closes bullish. Now by this, I mean this candle here closes bullish above the previous candle's high. We must see, and I'll mark it out for you, you must see it close above that candle's high. This then becomes your validation point, and then the highest point from this close up. Now if it was this candle, it'd be marked off this high, but this candle went above and then we went to downside. This becomes a valid high in the market. Now when we're in a bearish trend, we're looking for that close up for our high and for our low. So when the market continues bearish, you look for the close up once again, and this candle just closes above that candle there. So I'll mark it off and I'll show you. So this candle just closes above that candle's high. That validates your low in the market, and this becomes your valid low. That is how we look for our trading range using this smart money structure. And it's also going to help you to identify your directional bias, and later we'll cover exactly how they trap you with this structure if you don't understand it correctly. So this means for us to find a reversal in the market, you would need to see price running through this high, and for continuation has to run this low in the market. So let's zoom back out and we'll go across and we can witness that we break the high. And again, this is a valid breakout because it's a bullish close through the level. It has to close through. It cannot be a wick. Once we see this, now we're in a bullish market. Instead of using the up bullish candles like I've marked here, we're going to start using a bearish candle closing down this time. So as soon as we see from this breakout, we look back, where's the last time we had a close down? That was this candle here and this candle here. So this is our last time we see it close down. From that point, we look for our lowest point in the market, and it's going to be off this low. So this becomes your valid low in the market. And again, we look for the same sequence, and what we're looking for is a close down at this high. So if we mark this off, did we close down there? No, not quite. But we did close there to the downside. That means this becomes a valid high. And we can mark off here that I can mark a level from this high. And we can just drag that across and mark it off. That becomes your new high. So your trading range has gone from that bearish range to a bullish range in the market. We just move across. You can see straight away the market continues to be bullish. Now, when you see this, again, we look back, where's the last close down? That is your last close down, that candle right there, close below that candle. That means basically this becomes our valid low in the market. It's as simple as that. And we continue with the structure. We close down right there. Okay, so that candle closes down below that candle's low. None of these candles do that. And what that means is that we can mark out, let's get a new line just to show you, this becomes our new valid high in the market. And that's how we look at our smart money structure. Okay, it's a very simple process when you're marking it up. So that takes us back to current price. Let's just remove everything off. Our last breakout point is going to be from where we see, very simple, this is a reversal back bullish here. I can mark this off for breaker structure. So you understand that we had a breakout on that candle. Then we wait for what? We look for that close down. There's your close down. This means this becomes a valid high. And it also becomes the next break of structure. And when we look from our last break of structure here, we look for the last time it closed down, which is this candle. This became your current valid low. That high to low was your current trading range. Let me just show you. So from this high here to this low was your current trading range. Price came back, very short pullback, and then we broke out again. That now means we look to mark off our new low from here, and our new high is after we close down on that candle there. But what is that biggest mistake retail traders are making? Well, this becomes your new high and low. Just because you're seeing this breakout candle here to the upside doesn't automatically mean it's going to continue to run to the upside. That is where you're getting caught in those traps. Later in the video, we'll look at how you can understand to keep out of those traps by reading internal structures. But right now, the reason why we see this is because as soon as you see a break of structure, if you always remember this, write this down somewhere. Let me know you've done that already. Write in the comments below that you've written this down. Any point after a break of structure, you can see a pullback against that range. So in other words, as soon as we saw this bullish candle breaking up, we could have seen an instant pullback like we see here. There's ways of understanding that this breakout point is going to reverse the market straight away. And I'll go through that right now. So understanding the smart money structure is your first key point. Now let's understand how we can avoid being in those traps, those liquidity runs in the market. Why did we see this one continue to run bullish, where this one was a simple break above and reversed? If you know why, drop it down in the comments and tell me why you believe this happened. Now let's look at exactly why it happened and how we can do this. So you can do this yourself every time. What we look for is price action to the left of the chart. Remember this as well. Whenever you mark off your break structure, look to the left. Where's that area coming from? So the simplest way we can do this is mark off this level with a level and mark off this one with a level as well. So we'll look at the first breakout point here and that second breakout point there. We'll just zoom back a bit on the chart. Okay, this area of price. Hopefully you can see it and you understand straight away why this one made that reversal straight away, where this one continued to push through. If you don't understand the concepts, we have what we class an imbalance candlestick here, which basically has liquidity within it. Leftover orders, which the market will run to. Now, sometimes we can see these orders reversing price. Other times we'll see the market pushing through as a bias. So when we look at this gap in the market here from this candle, what we can do, we can mark off the open price of this candle, and then we can go back over. As soon as we see this candle breaking out, you need to be telling yourself at any point we could see a swing pullback. But what's going to help you with this is first identifying to the left, is there a reason for that swing pullback? And then you can understand the next step later when we look at the swing and internal structures. So when we look to the left again, is there a reason? Well, as soon as price broke out, we had this previous candle. As soon as we closed through the open price here on this candle, we'd expect price to continue bullish and to run for the next candle, okay, to look to this high. Where do we run to that next level? This tells me straight away the market is going to run after the breakout, and we continue to look to buy on those lower time frames, understanding these red candles here. Now, if you want to understand how to apply these to your chart as well, you can use this FVG imbalance zones on TradingView, which is by JP7FX. It's a great way to see those candlesticks before it happens to help you with your trading. Now, this video isn't about that. It's about understanding your market structure when we see those breaks. So that's how we can understand this was going to be a run to the upside. What about where we see this breakout and price reverse straight away? Very simply, it's the liquidity of this high being taken. So when we look closer at this, once we see this candle breaking to the upside, let's just remove this last level and this dot for now. When we see this breakout, what is it doing? It's running through this previous high to the left, taking any liquidity above that high. Now, at any point, we can expect a swing pullback. How do we now determine whether this is going to happen? That's where you understand your internal structure. So the easiest way to see this is going to the lower time frames. So once we see this breakout point, we can actually dive deeper to the lower time frame to see whether price is going to continue to run after breaking through or reverse. So on this occasion, this candle here gets reversed. Okay, we close through and we create a bearish one where price is going to pull back into this area before we continue bearish. That's just reading those candles, but understanding this point in the market, let's drop down to a 5-minute time frame. Let's mark this off and we'll drop down to a 5-minute. So on a 5-minute time frame, when price breaks above here, let's mark this off so we can see, and let's go closer in. So we're understanding that we're looking for the close of day. So let's drag this across because we've marked on the open of the candle. So 10 p.m. is going to be the close for me. That is my close of that candle. So let's zoom into this area. Reading your lower time frame structure is key. So again, we apply the smart money structure, which we went through at the beginning of this video. If you're not sure, just rewind, watch that bit again, how we mark it up. I'll quickly go through. So we have this as a break of structure to the upside on a 5-minute. Price continues up. We have another pullback from here, and you can identify this level is just a sweep in the market. So from this breakout point, we look back, this becomes my valid low. So understanding your structure, if we would have continued to see bullish price action after that breakout, from here, we would have seen this level hold price, okay, and a continuation to run higher. That didn't happen. What we did see is a close down through this level, breaking structure. What this is classed as is a market structure shift. So we've gone from a bullish bias to a bearish bias. Once this happens, this is where you can start to look to see if price is going to hold at our origin area. Again, we can use this last bullish candle as an example, this blue candle. When we see price closing down through that open price of that candle and pushing down, that told us we were going to reverse and continue lower. Again, I can identify and show you here. Price here held at the low of this candle. Then we broke through on this candle and we continued down to next areas until we ran this low. That's a market structure shift. This becomes an area of supply. And again, you can learn much more of this inside the Profit Trade workshop about supply and demand, how to incorporate that into your areas, okay, when you're taking your trades. This is more about understanding structure. So when you're reading your structure here, this was your move up. This was just a sweep of the high, and then we shifted bearish. So we went from bullish to a bearish bias, and then we look for the continuation down. So once you see this, you can start to understand your structure. This is your next break of structure to the downside from this area. Now the market does show a shift with smart money structure back bullish right here. Once you understand how to mark this out, it will become very clear. And there's some great videos in this channel which covers this structure. But all this is doing, and again, this is showing me a liquidity to be taken in the market. We have some highs here in the market. Let me just show you this area, these highs. Is going to create some liquidity above these highs, running up, and we may have even run through this high. Hey traders, before we wrap up, if you're tired of second guessing your trades or struggling to stay consistent, listen up. Danny was in the same place, stuck in a losing cycle, down nearly $300,000. Then he joined the 90-day profit trading system. Now he trades with confidence and has already made back a quarter of those losses. This isn't just a course, it's a full step-by-step system with personal support and lifetime community access to help you trade profitably. Spots are limited, so if you're ready to finally see results, click the link in the description and take that next step. Not quite there yet? Start with a £99 workshop. It'll give you a quick win and show you what's possible. All right, back to the video. Not quite. So basically price is just taking these highs here and then running down. And again, this is another trap to bring in buys into the market. But if you already understood where you were on the higher time frame, breaking above this level here, and you saw this market structure shift on the lower time frame, that structure was going bearish, then we continue to run down. And if we just zoom out from this point, you'll be able to see that the market shifts and continues down. I'm not saying you're looking to take trades from here, but I am saying you understand how to read that market structure shifting with that breakout. When you understand a previous high of liquidity is being run, this will stop you getting caught in those traps. And to take smart money structure even further, check out this video coming up now, which goes through the 2 time frames approach to help you to master smart money structure.